Hi, welcome to this video today. We are on Saturday. We're on the 1st of February. Just going to be looking at some trade setups, include the British pound today. We're going to be looking at the pound against the Canadian dollar in depth, and we're also going to be looking at the pound against the Aussie dollar and the Kiwi dollar, which are similar trade setups. Now, in last week's Forex forecast, I was saying, pound against the commodity currencies, one of our favourite trades. Now, in terms of the trades, they've worked out really well, up over 800 pips in the Aussie, 700 in the Kiwi, but just 300 in the CAD. I think GBP CAD now is going to play catch up and really move sharply higher. Now, in terms of the British pound, a lot of people said to me, will there be a pullback? Is the rally near an end? I think we can pull back, but pound is just going far higher on the commodity currencies. Now, in terms of the reasons why, we're going to go through them, but I just want to go through also reading news events in the right way, and also using a kind of grid or matrix way of trading to pick out the best trade setups. Now, what we will do is we'll go and take a look at the charts, but please do keep in mind, it is my view as of right now. It can of course change in line with the market conditions and action. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, you can simply click on the link beneath this video and get live access to our member center. Right, let's go and take a look at GBP CAD. We'll quickly look at the monthly chart first. Right, GBP CAD monthly chart, just very quickly to see the big picture. And in terms of the monthly chart, we can see the really big levels, which will help us when we're doing our entry stop target on the daily charts. Now, in terms of this pair, I've been interested in it for a while. Regular viewers will know, done plenty of videos. We first became interested in it here when we fell down to this 160 level. Market thinking there was going to be a hard Brexit. We thought there'd be no chance of a hard Brexit, so we could buy aggressively off the level. We got, I think it was about 700 and something odd pips from that move to the upside. Okay, and the pound, basically over the last few months, all nice blue candles, plenty more upside to come. Let me just draw a trajectory. Now, in terms of support, in terms of support, you see this big blue up, we get above this 20-month moving average, which is the green line. If we're bullish of a pair, we always want to see it break. That confirms our view. We want it to provide support as well. So we do exhaust here on the UK general election, come back, find support this month, bounce, and finishing at a monthly high. Now, in terms of support, I think now we've bounced decisively. I'm going to go for those bodies there. It's 172. Okay. Now, in terms of if we dip back to that level, it's a buy. Okay. But you can also buy on a breakout. Sorry, I need to line my line up better. That's another round number, 175. Okay, so pullback or breakout. You see there's got four bodies there effectively. This body is pressing. Now, we've said for a while, we feel that the whole Brexit decline will be retraced. So I've marked the Brexit candle already. So this is longer term. We should go up to 190. So really 1,500 pips. So plenty more upside. This has been a nice run up, but I think it could get better. And now, in terms of my target, it's not based upon obviously just looking at technicals. So we have to look at the fundamentals and sentiment behind the chart, which we're going to do, and give the reasons why we are so bullish of the British pound and just how to play the daily chart if you want to get long the pound in terms of entry, stop, and target. So let's go to the daily chart. Right, GBP CAD daily chart. Now, in terms of when we're looking, getting really big moves in the market, catching big trends, we like to use a checklist, and you can see 5 points here, and I want all those 5 points to come out clearly in favour of one currency over another. So we've got the interest rate outlook. That clearly favours the British pound. Okay. Now, in terms of economy, domestic health, that clearly favours the UK or British pound going forward. Now, in terms of the economies, you could argue the Canadian dollar, or not Canadian dollar, the Canadian economy is doing better than the UK economy. It is, but it's not getting any better. The economy has peaked. I've covered this in previous videos. It's not getting better. Whereas in terms of the UK economy, it's going to get better. Okay. Trading partners and exports. Well, GBP again has the advantage, or the UK. Why? Because Canada is heavily exposed to global trade and growth, and that's slowing up, and that slow up is going to continue. So the pound has the edge there again. Sentiment. Traders are still way too bullish of the Canadian dollar and too bearish of the British pound. So from a sentiment perspective, British pound has the edge. Then you've got risk on, risk off. Market's getting a bit risk off at the moment. If that risk off accelerates, which currency is going to do better? British pound. Even if we have risk on, the British pound is still going up. That'll just give it an additional boost. All 5 points clearly favour the GBP. Now, in terms of if you're bullish the GBP generally like us, you want to hit against the weakest currencies. Okay, so for example, I think the GBP is going up on the USD, but all 5 points don't line up for me. The most obvious one is risk on, risk off. Markets really see an acceleration of risk off, then the USD is going to be strong behind the yen on its safe haven status. So there's no point in having a big exposure on GBP USD from our point of view. Better to hit the weaker currencies, the commodity currencies, which are the weakest of the majors in our view. And if you look at our trading over the last few months in the British pound, picking the commodity currencies rather than USD has been the right choice. I think it's the right choice going forward. Now, in terms of, before I draw my levels, just want to go through the Bank of England meeting last week. And this quote, first of all, just in terms of reading news events and doing it kind of in a detached way. Now, in terms of this quote, it says, "This was perhaps the most difficult meeting to predict for many years, with money market pricing suggesting odds of a rate cut were 50-50 heading into the meeting, meaning whichever way the bank opted to go, they will deliver a surprise." We were saying the weekly forecast, couldn't see any chance of the UK or Bank of England cutting rates. It was just, in our view, not going to happen. It didn't happen. I think, market got a little bit too obsessed with the bank cutting rates and not really looking at the facts and thinking like the central bank. And I'll just go through this very quickly. Data after the December election, was above forecast. Before the election, there was a lot of uncertainty, which means the data was weak. But the little bit of data we had after the election, we had that much, was above forecast. Confidence has returned. And that's both in terms of the business and the consumer, which means that, basically now uncertainty about Brexit and the election is removed. Businesses will spend more money, so will consumers. Market was focused on inflation being below forecast. That was a major reason why many analysts and economists thought the Bank of England would cut rates. But there's a reason that inflation is going to rise, okay? And the market was just not focused on fiscal spending. Government has got a big spending package coming in the budget. That's the same as a rate cut, isn't it? It's stimulative. It'll boost GDP and it'll boost inflation. there's no point in the bank cutting rates. Yeah, rates are only 0.75, cutting them 25 basis points. Well, what's the point of that? You may as well hold rates and see if the data continues to improve after the election and how the fiscal spending works. Fiscal spending does work, okay? It will boost GDP, it will boost inflation, and basically the Bank of England are aware of that. Also, if you looked at the Bank of England, the voting patterns of the committee members, we thought there'd be two dissenters, as we wrote in the member centre, but you're not going to overturn the majority of 7-2. So UK was going to hold, and that gave us a chance to double up our positions. Okay, just after the Bank of England, get a bit of extra profit, then tuck it in, leave the core position in. The market still thinks rate cuts are coming. Yeah, I was looking after the Bank of England, so they didn't cut this time, but they'll be cutting in a couple of months' time. No, I don't think they will. And I think that the fact that a lot of analysts and economists think that that's going to happen is bullish for sterling. When you're reading news events, try and look at the facts, so to speak, as a central banker would. I personally thought that it was just clear cut the Bank of England would hold, which they did. Okay, not going to be right every time, but on this occasion it worked out well. And in terms of the price action now, got some bodies here. They've been taken out, yeah? So it's 172.65, I think, if I remember correctly. And I've drawn a trajectory. You need to keep your stop back behind the 172 level, so you need to be behind those candles there. Okay, and also there's the 20-day moving average. We're nice and strong, okay, by the breakout. Okay, so you can come in at 175.30, just clear of round number turbulence, okay? You can buy the dip as well. You need to have strength off the level, obviously, but you could buy the dip. But I think we could break out. If we break out through that level, looking for a strong blue, we've seen the big picture on the monthly chart, okay? A lot of upside. This candle tail doesn't matter. That's just the election exhaustion. Punch through here with a big blue. The stop from here can then be brought up behind that low, the low of the last candle. When we look at GBP, AUD and NZD, you see how they've really soared to the upside. I think this one could be about to play catch up. So dip or on a breakout. In terms of in the member set, this will be in the guest pairs section. I'll shift it into that section of the site next week so you can follow the levels daily. Let's go now and look at which one should we look at next? So let's look at GP, AUD and NZD. So they've still got plenty of upside potential as well. So we'll update those trade setups. Obviously they've run a little bit better for us than this one. This is the one I'm going to probably shift my main focus to. I'm going to keep the other two but put a bigger weighting on this one. Right, GBP, AUD. Right, just going to use the charts on my member center for the last two pairs. This one is GBP, AUD. And just before I forget, for anyone who is a member of our site, I've updated all of my charts today. Just feel we're going to have a very active week next week. The week gone by was a great week, not just trading British pound pairs, but plenty of pairs did what we hoped they would do. So it was a really great trading week, and I think we could see another good week ahead. So all the charts are updated, and I'll update obviously on Monday, the normal time as well. Now, in terms of GBP AUD, top performing pair, the three so far. Really nice entry at 189.20. Got it there. And then up she goes. There's the Bank of England. Just before the Bank of England meeting, we're saying just buy a break at that level if you want to come in fresh. doubled up our position, and then we've taken off the double up, if that makes sense. So we're leaving the core position run, but that gave us, a good few hundred extra pips, and they're in the bank, and we still got the trade running in the market. And in terms of this pair, I wouldn't buy it on continuation because I can't see an obvious level to come through on the monthly chart. I would wait for the first pullback if you wanted to get into it fresh. We are nearly at the 2 level, which is really the retracement, the whole Brexit decline. And in terms of this, I do feel we're going to hit that target, and I've now actually extended it up to 2.15. I think the Aussie's got way more weakness longer term against the pound, so up to the 2015 highs. So this one worked really well. And in terms of the Kiwi, also, like I said, the CAD is the one that's been the worst performer so far. Here's the Kiwi. Kiwi, again, we got a nice level in 196.80. Up she comes. And actually, before the Bank of England meeting, we're saying, just buy through the 2 level. We bought through the 2 level, 204. So you've got 400 pips, okay? Again, what we did, double up the position, taken off the double up now. That's in the bank. Still got the core position running. And we're going for 2.15. So a lot higher. Still plenty of potential. So, yeah, all 3 pairs done well. CAD has been the laggard. That is one now I'm going to shift my major weighting to. I'm still going to keep the Aussie and the Kiwi, but put a little bit more on the CAD. So yeah, I think in terms of the British pound, yes, it has moved nicely, but to the upside. But I think more upside to come. I've liked trading the British pound recently. It's been very kind to me, so I hope that continues next week. But we shall see. Should be a very interesting week ahead. But in terms of the video for today, that is it. So thank you very much for watching me. Take care and have a good day.